Imagine betting everything on one breakthrough drug, only to watch it all collapse in a single announcement. This is the rise and the brutal fall of Syros Pharmaceuticals, a biotech once full of promise, now delisted, selling off assets and trading for pennies. What really happened? And why is Wall Street calling this one of the most shocking biotech collapses of 2025? Stay with me, because this story gets more dramatic the deeper we go. The dream, Syros Pharmaceuticals, ticker symbol SYRS. Their mission was bold, to transform treatment for a rare blood cancer called higher-risk myelodysplastic syndrome, HRMDS. Their weapon? A drug called tamibarotene, designed for patients with a specific biomarker, RARA overexpression. The pivotal Phase 3 trial, called Select MDS1, wasn't just important, it was everything. If successful, tamibarotene could have been a breakthrough treatment and a multi-billion-dollar opportunity. Investors were excited. Partnerships with giants like Pfizer boosted credibility. For a moment, it seemed like the stars were aligning. The collapse begins. Then, October 2024, the results came in. Tamibarotene failed. Response rates, 23.8% in the treatment group, 18.8% in the control. Not statistically significant. The safety profile was fine, but in biotech, efficacy is king. That single result triggered a domino effect. Loan default under Oxford Finance. Investor confidence gone overnight. And Syros shifted from rising star to survival mode. The numbers. The Q3 financial report told the rest of the story. Zero revenue, down from 3.8 million the year before. R&D expenses cut from 28.3 million to 20.5 million. General and administrative costs down to 5.7 million. Net loss, $6.4 million. Cash reserves, 58.3 million. Enough to last until the third quarter of 2025. If they cut hard. And they did. Delisting and the endgame. March 2025. The final blow. Syros filed to voluntarily delist from Nasdaq and deregister from the SEC. By March 20th, the stock was gone from Nasdaq. In April, they sold their tamibarotene assets to Japanese firm Rege Nephro. The mission was over. From that point, Syros was on a wind-down budget, spending just enough to settle debts and preserve whatever value remained. The stock's brutal fall. At its peak, Syros caught the attention of biotech bulls everywhere. By mid-2025, the market cap had collapsed to around $70,000, a 98% wipeout. The stock? Trading between 16 and 18 cents. A ghost of its former self. Chapter 6. Lessons learned. Biotech can be explosive, but it's also one of the riskiest sectors in the market. A single failed trial can erase years of work and millions in investment. For Syros, tamibarotene was everything. When it failed, there was no plan B. For investors, the lesson is clear. Diversify, understand clinical trial risks, and never bet everything on one drug. From the lab bench to Wall Street to a delisting notice. Syros Pharmaceuticals is a cautionary tale. Could they have survived if the trial had inched closer to success? Or was this collapse inevitable? Tell me your thoughts in the comments. And remember, in biotech, hope can rise fast, but it can disappear even faster.